Hey guys, Sam here. I'm back with another real estate investing video, and today we're going to be talking about the toughest factor or most limiting factor in real estate investing, the money. How do we get our deals funded? Obviously, we could just save up our money, plunk down big 20% down payments, but that's going to put us on a really long time frame. Maybe 1-2 properties a year if you're lucky. That's a pretty long road to financial freedom. If we want to pursue other passions or quit our job sooner than later, we're going to need to find a way to fund deals faster. Because real estate is a get-rich-slow scheme, as I like to call it, the more properties we buy and the longer time we hold on to them, the more benefits we're going to see in our net worth and overall financial future. Make sure to like and subscribe and turn on the notification bell below to stay up to date with our videos. Now let's jump into all the ways we can overcome the #1 limiting factor in investing in real estate and learn how to get our deals funded. So the first way we can fund deals is literally with all cash. We're talking dollar bills, baby. I mean, literally, you're gonna look at the purchase price of a home and that's how many dollars you're gonna buy the property with. No leveraging our money at all. This is the most straightforward and easiest way to think about investing in real estate. However, a lot of us are trying to buy more properties sooner than later, so we can't buy houses Dave Ramsey style in all cash. We're gonna need to look at other creative solutions to accomplish this goal. Number 2, another way to get deals funded is by using bank loans, also known as traditional financing. We call this traditional financing as this is what most people do to get their deals funded. Instead of buying a house in cash, we're just gonna save up a 20 to 25% down payment, and then we're gonna let the bank fund the rest. There are also low money down programs that will let you put in as little as 3 to 4% of the home's value, or even 0% down if you're part of the military. Interest rates on traditional financing are also at historic lows. And just because they've ticked up half a point in the last couple months, doesn't mean that we're not still in an amazing time to invest and secure long-term financing, these traditional loans. The beautiful part about bank traditional financing is that because the property you're purchasing is going to be rented, this means that the tenant is actually going to service the loan for you, plus a little bit on top of that, which is your cash flow. The next way we can fund our real estate deals is through a home equity line of credit or a cash out refinance. Both of these options are for those investors that already own a home, like a primary residence or investment property. The essence to both of these strategies is that you're gonna be tapping into the equity that you already have accumulated in the property. That equity accrual may have happened because of your tenant paying down the mortgage for you, your house appreciating in value due to renovations or just market forces, or a myriad of other factors. For a cash out refinance, we're usually gonna be able to borrow up to 70 to 80% of the equity that we have in the home. So we're creating a bigger, newer loan to pay off the existing loan, and then we're gonna take out the difference in cash, hence cash out refinance. In the case of a home equity line of credit or HELOC, it works like a credit card, and we're not given a big lump sum like a cash out refinance. Your home equity line of credit starts with a balance of 0, and when you use it, it works just like a credit card because then you'll have a payment back to the bank for the use of that credit line every month. The good thing about home equity lines of credit though is that the interest rates are gonna be a lot lower than a credit card because the debt is secured by the value of your home. Unlike a credit card, there's nothing backing that debt. So the way to use a home equity line of credit is basically getting that approval for the line of credit and then using that credit to go buy another investment property and then factor in your monthly payment for the use of your home equity line of credit to the numbers in that new property. And if it makes sense, cash flow on, baby. Next up, we have the 1031 exchange. And you might be thinking, hey, that's kind of like a tax strategy, not a way to fund deals, but let me explain. The 1031 strategy to fund deals is also, of course, going to be for people who already own a property. The basics of a 1031 exchange, which I explained in a 1031 exchange specific video, which I'll link here and down in the description below, is basically that you're gonna be rolling the profits from the sale of one property into another property or properties without triggering a taxable event. And this is really cool because it means that you're gonna be able to take a property that might not be performing super well, it's just barely cash flowing, or you're having issues with other things, and you could actually turn that property into a new one that, you know, cash flows really well, or you could use that equity that you've accumulated and turn it into 2 properties, and then you've basically created another deal for you. You funded another deal. That's pretty cool. Another way we can fund deals is by using retirement accounts. And you might be thinking like, again, tax strategy, how am I supposed to fund deals? Well, there's always the option of just raiding your retirement accounts, paying the penalties and putting that cash into real estate, but we're gonna talk other strategies here as well. Because we don't wanna deplete that awesome like nest egg and treasure chest that we've accumulated our entire career, the best and smart way to use a 401k to invest in rental properties is to take out a loan against the balance that you've accumulated. And what happens here is we're basically making a loan to ourselves from our own money. So it's not a withdrawal at all. The loan is then paid back to our own 401k from our payroll, and then all the interest on the loan is also being paid back to ourselves. So there's no wealth depletion at all here. It's pretty cool. We're simply leveraging the resources that we already have and tapping into the potential that they provide us and creating even more wealth. The next way we can fund deals is through a self-directed IRA. And the way we can do this is basically, if we already have one, we're gonna liquidate some of the stocks and bonds and other investments that we have in there, and then just buy real estate with that cash instead. This is great because maybe those investments before just weren't providing a very high return. And if you don't have a self-directed IRA already, it's very simple. You're just gonna set it up, fund it with cash, and then buy real estate inside of there. And the best part about the whole thing is that when your rent checks come in from your tenants, you're now operating in a completely tax-free environment. So there's nothing to worry about. I mean, it's just tax-free growth on the appreciation of those properties, on the cash flow, and it's just an amazing wealth building vehicle. A really creative strategy we have to fund real estate deals, and you have to be really smart and really on top to use this, but you can use credit cards to fund your real estate deals. Credit cards, or unsecured lines of credit, like I mentioned before, usually have much higher interest rates because there's no collateral behind them. However, credit card companies make a lot of money based on transactions that happen with credit cards, etc. So they just wanna attract as many customers as possible. And they're gonna offer these 0% promotional interest rates to get you to sign up for the card. And what we can do there is basically have a 0% interest rate for 1 year, and that will give us some runway to use the credit card to put down payments on our deals. Then after that 1 year, we can find other credit cards to roll that balance over into and basically just rinse and repeat, continuing on those promotional 0% offers. But like I said, this is very high level, and you gotta keep track of dates and balances and make sure you're doing this all properly so you don't get screwed over. You also want to make sure that you're obeying lenders' rules and not lying to any lenders, because some lenders are not going to want any of your down payment borrowed, and they will ask you about that. Where are you getting this money from? And if it's borrowed, aka from a credit card, they're not gonna like that, and they're not gonna give you the long-term bank financing like we talked about. However, if you are smart enough to pull this off and stay organized, you could be putting down payments on houses and funding your deals with no money out of pocket at all. And all the while you're racking up airline miles, travel rewards, points, and cash back. We can also use private money to fund our deals. And what is private money? Well, it's basically just money that comes from private citizens or private investors. This means your mom, dad, your Uncle Joe, your Aunt Susan, your real estate mentor, or even your wealthy neighbor. It could be any of these people. You can structure a private money loan, basically like a personal loan. So you're gonna draft a promissory note to that private citizen, and basically you just pay them back with whatever structure you agree on, the interest rate and the term, aka how long the loan is going to be. Just like with long-term bank financing, as I mentioned before, if you have that property rented out, then this promissory note is also going to be paid back via the tenant. You need to factor in the interest rate to your numbers though, to make sure that you're not coming out with negative cash flow. Next up, we have hard money. And hard money, I mean, it has an intimidating name, but it also is intimidating because it gets associated with house flippers and shorter term investors to fund their deals. Hard money lenders are typically smaller lenders that need higher returns on their money, and hard money lenders are typically going to be looking for high single digit and double digit returns. They may also require a minimum loan amount, so you can't just borrow a couple thousand from them. With high interest rates on hard money loans, you're really not going to want to hold that financing for very long. And as soon as possible, you'll want to refinance it into a longer term stable loan with a large bank or family member sooner than later. Get that amortized on like a 30-year loan and make the cash flow look a lot better. Don't pay so much in interest. For these last couple strategies that I've explained, I've got a couple tips to keep things smart and legal and just make sure we're doing everything right. Number one, if you're gonna be raising money from other people, you're gonna need trustworthiness and a good track record. Even if you don't have that really good track record yourself, you're gonna wanna surround yourself with people who do have good track records. If you want someone to invest in real estate with you, you need to make them comfortable by showing them that you know what you're talking about and you're not just gonna lose all their hard-earned money. A history of putting together successful deals yourself or surrounding yourself with people that have a lot of validation in real estate are both gonna help you fund deals and find partners a lot faster. Next, in order to get people to invest with you, you do need to find good deals. If you don't know how to find good deals, please go back and watch our How to Analyze a Property video, which will spell out how to analyze rental properties and use our tool that we have on our website to make it really easy. If all the good deals that you're finding are just getting snatched up by other investors before you can raise the money, you're gonna wanna create sample deals. Send your sample deals to your potential deal funders and show them like, AKA, if this didn't get snatched up, we would have bought it, here's how much we would have paid, and here's what the numbers would have looked like. If you do this will help get your deal funders more comfortable and it'll show them that you know what you're doing so that when the next one comes up, they'll be ready to jump on it with you. You'll also have to decide money you're raising from other people. Is this gonna be a partnership in equity or is it going to be a debt partnership? For the debt side of things, you're going to have to offer a pretty attractive interest rate to those who are lending to you to compete with current stock market returns in this crazy bull market. If you're going to be equity partners, go and refer back to that trustworthiness section that I just talked about, because if you're equity partners, you're gonna need to get along really well and also have similar investing goals. Next, we're gonna make sure we're keeping everything legal. So make sure to consult attorneys, tax professionals to make sure that you have the right entities and funds set up like 506Cs, 506Bs, etc. Your tax professionals and attorneys can explain all the logistics and all the details of those for you. Last but certainly not least, if we're gonna be taking money from other people to fund our real estate deals, we need to have really good communication and update our investors and partners on how the deal is going very often. No investor or partner wants to give their hard-earned money to someone and then have that person go completely dark and not have any idea what's going on with the deal. All right, that's it for our deal funding video. I know that was a lot of information, so please go back and watch again if needed. And if there's anything you don't understand, please drop me a comment below and I'll address it in the comments or make a totally new video about it if it warrants it. Also, if you're worried about how expensive real estate is, go back and check out some of my market highlight videos, which review some of the markets in the Midwest that have pretty affordable properties, and real estate might not be as expensive as you think. So you can scale your portfolio a lot easier and not worry about raising so much money. Whether your deals are big or small, billionaire John Paulson said, "I think buying a home is still the best investment any individual can make." Okay guys, thanks again. Like and subscribe, turn on the notification bell below. And for more info about rent to retirement or anything that we do, please see the contact info in the outro. Thanks again for watching, and I'll see you in the next video. Peace.